Hi everyone, this is Sandeep Anand. We are in a raging bull market in 2020 as we talk, and correction is really a bad word to use during the bull market. Anything like valuations, corrections are all not so good words to use when there is raging bull market. There is so much of exuberance everywhere. But there are two types of stock market corrections, which means prices correcting itself. It is time-wise correction and it is price-wise correction. Today I'm going to explain the concept of time-wise correction with a couple of examples as we speak. So one slide of view here on explaining time-wise versus price-wise correction. The key takeaway, when you invest in great quality companies which are growing really well, which has a great potential of growth ahead and runway ahead, those companies sometimes, they price way ahead of the growth. The market prices those kind of quality companies way ahead of the growth. And because there are seldom such quality companies with all fundamentals right in place. Now, what happens when they run way ahead of the growth ahead? They go through a time-wise correction, which could be few months or even years. But the good part about entering into quality, fundamentally quality companies is when the broader market falls precipitously, like we saw in March 2020, these stocks fall lesser, but they go through time-wise correction. So that's an interesting concept. Whereas there are speculative stocks with no fundamental strength, and the rising tide lifts all the prices up. All the such speculative, fundamentally non-quality stocks, they all go up and they all fall at the same pace rapidly when the broader market falls. So that's the difference between price-wise correction and time-wise correction. We are going through a similar phase with a raging bull market where all the stocks are lifted up. But the good thing is to notice you can see fundamentally quality companies, they go through months of time-wise correction. Here are two examples, recent examples. As we are talking, look at Shopify. It was trading at $1,062, or rather $1,029 per share price in July, first week. And after 5 months of time-wise correction, it has gone through. It's still trading at almost the same range, hovering around 1,060, 1,062 price range per share. And that's the typical time-wise correction that happens. And it could go for a few more months and until the earnings catch up or the revenues catch up. Netflix is another example. It's going through a similar correction. Since last 5 months, it's hovering in the range of 490 around per share price. And it's also going through a time-wise correction. Similar is the case with many of the FANG stocks. They're all going through this time-wise correction and they're all great quality companies. It could happen that, the impact is the opportunity cost because the stock price remains at the same range, and elsewhere there could be potential value buys. But the good part about looking at these quality companies is when the whole broader market falls, you fall lesser with a price-wise correction.